Good morning. Good morning. Let's see if there's anyone there. Morning, everyone. Oh, I'm a little early. Good morning, everyone. I'm a little early. Anxious to get a jump on this kooky week. And I just realized that this week is month end. So here we go. Let the madness begin. You guys talk about March Madness? Well, here you go. Travis, Juraj, Raj, Alvaro, welcome to the room, Alvaro. Good to have you with us. Hey, Zeno, how you doing? And it is quarter end too. Thank you, Raj, for reminding me. You're like Ernest Borgnine in Red, the records keeper. Hey, Lonigan, what's up? Mikey, what's up? How's my favorite quant? Do we call you a quant? Is that your official designation? So we're lucky we have actually some people who do work on the street in our room. Mikey is one of those high functioning math dudes. So we often need translators to talk between me and him. Well, let's get right to it. It's going to be a bit of a longer stream today. I got back late. Girlfriend was working in a hospital outside Liverpool, so had to drive back, and we got back a little late. So I didn't do my usual week ahead video. So we're going to combine it. Let's get you guys situated right away and get you up and settled in this market. Now, when you take a first look at this, okay, we'll start with the daily chart. Check this out, folks. So we've got a gap, right? We opened on a gap. We're outside Friday's range. We're also gapped up over 57.30, which is where a bunch of that inventory is. So it's underneath us, right? So always remember that when inventory is underneath us, what do you do when you have all the marbles and you've paid a nickel for the marbles, right? You go sell them at a higher price. That's what we're doing tonight, right? So we're in distribution tonight. So right away, that's the first thing you think of, distribution. Now, one of my guys, Howard, asked me, he said, what the heck do we do when it gaps up like this? So here's the answer. When a market gaps up on the overnight open, what does that mean? It means that in that opening auction, there were a bunch of bids, there were a bunch of buy orders. So the sellers lifted all their offers. You don't see that, right? That's in that hour before the market actually opens. It's called a pre-open, right? So when that happens, the sellers go, are you familiar with the saying, the seller, they get wise, right? They smarten up. They go, holy crap, there's a ton of buyers. So they start lifting prices. So the market gaps up, right? Because if you have all of the supply underneath a certain level, right, and you see a whole bunch of buyers, it is your moral obligation to take advantage of them, right? As a business person, right? Think about it. You guys all have to watch Other People's Money with Danny DeVito, okay? Seriously. It's a great education in this business. All right. So here we are. We're gapped up. Now, here's the curious thing. We talk about inventory. What is inventory? Well, inventory's all the stuff we're selling. This is a sales chart of ES. That's all it is. So all of our inventory is between 57.73 and 55.84. Okay. We are in this big zone from 55.84 to 58.25. The middle is 57.04 half. Okay. So this is for you longer term traders, right? Once we get above 57.73, there are only 4 days of volume here, which I'm sure a lot of this flushed out. So if that did flush out, what we need to do is we need to take this and go sell it up here. Now, right? What do we need to do that? Well, we need the order flow to do it, because if the customers aren't there, you can't sell it higher, right? So this is going to be this 57, 73, 75 level. That's going to be, what do you guys like to call it? Line in the sand, right? I prefer your like fifth and goal, right? There's your goal line. So if once we get over there, this is for people who are long size in this rotation. This is flavor country right here. This is the promised land, right? This is where you can sell your inventory for a profit before the end of the quarter, therefore making you look like, dun, 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 now you look like super fund manager, right? You know, I bought contracts down here, I sold them up here, right? We booked a profit, right? This is a performance-based business. People get paid on their performance. If they don't perform, they don't, you know, it's, first of all, if they don't perform, it's embarrassing. And then they also lose clients. And then it gets even more embarrassing because now you have to give up your private plane, right? You know, hey, that's lifestyles of the rich and shameless. I kid. Okay. All right. So that's what you're looking for. Now, from those who always sing the all gaps fill song, that's a short position, my friends. So your overnight low is key. Our overnight high is 57.69 and a quarter, which is just creeping. We are creeping through the tall weeds with a knife in our throat, in our teeth, trying to hit that 57.73. So we're close. Let's see what happens when we get there. Is there a reaction? We'll see. Can't tell till we get there. We should be getting some kind of inventory correction lower. If we don't, it tells us that the shorts are really desperately bid under 57.40. Okay? Let me repeat that. If we don't get a correction lower, right, the first area is going to be where those single prints are. I'll show you on the more detailed chart. And then the overnight low. If we can't get underneath 57.40, that means there is a very strong, large amount of bids from 24 to 40 from trap shorts, because that's not a long strategy to buy a gap like that, right? The only buyers in there will be shorts. And if that holds, we'll get this, okay? Because month end is Thursday. Last trading day of the month is Friday, right? Can't believe we went through March already. My goodness. Just ripped right through March. So now we got this mess in the overnight, right? There's the gap. There's Friday's high at 57.22. Okay. There's tonight's low at 39. And guess what? Boing, one time frame up. Look at all the stops underneath here. Look at that beautiful. This is like a symphony of stops right here, right? That'll be interesting if we can take those out later in the day. For now, we have a short squeeze going. Jim Simons, welcome, and so glad to see you're alive again. Oh, man alive. So all of these are stops, the low of every half hour period, right? I'll go and mark them in later. I just want to get you guys going. So let's take a look at the market structure. Market structure tells us where the buying and the selling could be if the order flow and the inventory line up just right, right? It's like that commercial where the guy's chocolate goes into the peanut butter and the Reese's peanut butter cup was born, right? That's the miracle of commerce. So we have a short position here. We have another tiny short position here. That's what these single prints show us. This is the beauty about market profile. It's kind of complicated and it hurts your head like an ice cream headache when you first start looking at it. I won't lie, right? When I first started looking at market profile, it actually gave me headaches. It takes a while for your eyes to get used to it. There's a short position here when L period took the high of K. There's a short position here when K period took the double top in H and J in the overnight. Okay. So what happens is, what is a short position? A short position is created when people are trapped underneath it. They'll be shorting using this as, you've heard of the term mental stops. Well, when the market gets back down there, it'll be bid because that's where they're short and their stop should have been had they been trading small, right? Large traders like, fund managers don't use hard stops. They manage their positions because they don't freeze. So there, they'll be buying here, they'll be buying here. At the bottom of these areas where we encounter these single prints, there will be bids from short sellers who are what we call bid to cover. Bid to cover, as opposed to the coin of bitterness, BTC, right? See how it just stops? So market awareness. We look at the first thing you do when you look at this is you go, oh my God, okay, this is not normal. Gaps like this are not normal. Sure, in penny stocks, but not in the most prestigious market in the world, right? So you got a big gap, you got a big short position, one time framing higher, the shorts are trapped. You got two sets of single prints, shorts are trapped. So now everybody wants to short it, right? When a market acts like this and it looks a little, let's say it's a little, as Rocky would say, mentally irregular, right? This is not normal, right? Time is your friend, my retail trading friends, okay? Time is your friend. Let the market, like say you just, you started trading in Globex, you're all ready to go. New York opens at 6 and it opens on a gap. Well, what the hell do you do? Right? Give it some time to build out some candles, right? If you do that, you will allow the market to show you the structure and you can see, oh, right away you can go, oh, there's a balance right here. See? There's a balance here. There's a bit of a balance here. So I would use this as a balance, right? That's that two-sided trade. Now we're going to take this product and see we're balancing up here. Let me kind of explain what this whole in the most simple terms I possibly can. You want to look at a chart, right? It's a sales chart. So what are we doing here, folks? Right? Here is where we fill the trucks with goods and we take them to the first store and we sell. This selling and this sideways motion, what does that do? That creates price stability. Price stability, you guys talk about uh, psychology in trading. How about psychology in selling people lots of stuff, right? So this creates price stability that draws buyers in. So then we load the trucks again with inventory because we had to buy some here too. And now we're selling it here. So this is how markets work. So this is the highway to the store. And it's hard to get those trades. So sometimes we just like to trade the back and forth, right? Let time be your friend. Let the market develop. Let it show you where the buyers and the sellers are what we call both sides because they're the same people, right? So we do the same thing every day. Hey, Moran, how are you? Right? We have a simple 5-step process that we show people in the room. This way, you don't care if the gap fills, you don't care about any of that. All you care about is how you're going to do business. What is your trade setup? Okay? You don't have to worry about anything else, right? Yeah, you can do that, Jim Simmons, if you have a big enough account. I do not recommend new traders dollar cost average at all. That is an investing term, and that's a surefire way. If you're not using stops, you always have to know when you get into a trade, where the hell are you going to get out, right? And you also have to know if that trade isn't working, there's a business reason why the trade's not working. That's how we manage our risk. So when the trade stops working, we're out of the trade, right? Now, Mr. Simmons, if you're trading like 6, 7, 8 figures, you can average into your losers, but that's an insanely risky proposition for a retail trader, especially one who is not consistently profitable, who does not have a method of managing risk that is automatic and a keen understanding of how the business works and why they should get out of a trade where the business and the order flow is not supporting your trade, right? So here we go. We've got our balance from 57.52 quarter to 6 quarter, double it to 64 quarter, and double it. I understand what you're saying, Jim Simmons, but very dangerous. Hey, stop, look, and listen. How you doing? So there's our balance zones. Yeah. So you're ready to lose $1,000 to make $100. That's not really good business, but hey, who am I to judge? Okay, it's your money, right? Whatever floats your boat. Hey, Mr. Meteor, how you doing? And welcome to all the folks joining us on YouTube. So we're in distribution now. We've got our balance levels. We know what we want to do when we want to, take a trade. So right now, folks in my room, answer this question. You've gone through the market, right? Now, based upon, now we do a market awareness. We know the market's in distribution, right? We know the market's in distribution. We know the distribution is slow. We know we have multiple short positions underneath us. Price action is slow. Is there a trade here? There you go. Thank you. No trade. Yep. And if he was trading for Vanguard, he's definitely trading more than a $2,500 account. When you say it out loud as a retail trader, I don't mean to beat up on you, man. If you're ready to lose $1,000 to make $100, you obviously have money. But a lot of the people here, like they work hard for their money, and my job is to keep them from just blowing that money on reverse asymmetric risk, right? Do you use overnight and cash to build the analysis or only the cash? I use both. So if overnight inventory is long, as we get close to the open, I'm looking for a correction. If we don't correct, that tells me the market is bid. If overnight inventory is short and we don't get a correction higher, then I know that we have competitive selling and to be careful going long. Does that make sense? Right? It's all about being aware of what's going on, your surroundings, right? You have to understand what's going on around you. That's why traders don't make money because they're buying at the wrong time, they're selling at the wrong time, hell, they're trading at the wrong time because they're trying to trade this. This is not for you to trade. This is institutional business, right? So if you were long size, this is great for you because you get to sell to the new buyers and you can sell slowly. Everyone's trapped under here, right? Under 62, right? And then you can see the trap here, right? So what we like to do in this room is we like to have people make a living, right? And we like them to manage their risk. Hey, Jim Simmons, you're hijacking my stream, brother. That's cool, right? I'm not going to address that because I don't teach people how to trade with that kind of risk. It's too much money to lose. If you're using some of my stuff and it's working for you, that's great, right? But most people cannot afford to have that. And your win rate doesn't matter when you when you win, you make more than when you lose. I teach people to keep their stops tight. Otherwise, how many $1,000 hits can you take before you blow up your account? Like, say it out loud. Anyway, I'm not going to argue with you, right? You're entitled to your opinion and keep on trucking, right? For those who want to learn how to trade and minimize their risk, we use my methods. And listen, I've been doing this for 33 years. Retail traders, when they try and trade like institutional traders, they don't have the sophistication, they don't have the skill, they don't have the money, and they don't have the knowledge of the business, right? Okay. Here, there is no trade, right? One trade I do see for people that I could imagine people are short. Now, if you're short, what are you looking for, right? I'm not in the trade. It's Monday morning. I haven't done any trading yet. I could see that there's a seller here and here and here, and the seller is moving down. As actually, the sellers, plural, are moving lower as price is competing. So if you are short, now let's see if this 64 and a quarter level works. Okay. Hey, John, what's up? Where are you in Morocco? You're in Spain? Where are you at? Tangier. Ooh. When I think of that, I think of the Pink Panther. Peter Sellers. So there's your offer moving lower, right? So if you are short and the offer is moving lower, exactly, Mike, and the offer is moving lower, you could stay short. Now you can see that there's some bids coming in right here at 65 and a quarter. Exactly, Lonigan. Right. So they see bids here. As soon as the market identifies that there are bids, right? Whether it's done by humans or by software, right? You can see the bids right there. What what do you do when you see buyers? You raise price, right? I know we can't say that now, right? You start lifting price. That means lifting the offer. And when you lift it, it's going to come to the areas where the sellers engaged before. So say you were short from 68, 68, 67, right? And you were using 68 and a half as a stop. Well, put some bids down here at 65 and a half, because if you're not going to get hit at 65, how are you going to get hit here? Right? If they're pulling the offer when you get to 65, where's your seller? Right? Remember those commercials? Was it from the 80s or from the 90s? It's like 9 o'clock. Do you know where your kids are? Right? Well, here it's 8 o'clock. Do you know where your sellers are? Right? If you are a short seller, you got to know where your sellers are. If you don't know where your sellers are, you are situationally unaware. If you are unaware, you're in trouble. Okay? Right? Here's the thing. Okay? When it comes to win rates and stuff like that, what you guys should be focused on is not losing money. Right? This whole it's okay to lose money, that doesn't wash in business. Okay, that doesn't wash. If you think that you work at an institution and if you lose money continuously, they'll go, "Oh, it's okay." Right? It shows lack of discipline, and that trader is gone. It's simple. See how we're hitting sellers here, right? How is this important and useful? Well, if you're long, then you know where you're going to have competition from other sellers, right? Keeping it simple. Keeping it simple. Right? This is the this is the boring part. So this is when you come in, right? We just came in, sat down, did all our work. We're ready to go. Now all we have to do is for the business to match up with our trade execution. That's all we got to do. When our way of doing business comes up, you take it, right? And your risk is defined, right? There's a business reason why your trades work, right? When the business reason goes away, you and your capital should go away as well. Unless you have a money tree in your backyard. And if that's the case, please send me your address. I will be the gardener. Captain Flowers, London Open. Here we go. Yeah. A minute and a bit. I anchor VWAP at the Globex Open, 6 p.m. I have it on here. Let me put it back. I took it off when I was drawing my levels and stuff. So where's our VWAP? Our VWAP is down at 57.53, right? It's anchored at the New York 6 p.m. Open. I use 23-hour VWAP. I know you can anchor it all over the place and it's very cool, but I don't like a lot of things on my screen. So usually what I'll do is I'll just go and I'll mark where VWAP is and check in on it every once in a while, especially if we're far away from it. I know we're in distribution over VWAP, and I'll just get rid of all this stuff. I like a clean chart. The more stuff on a chart, right, it's just too much for me, right? Show me where the bids are. Show me where the sellers are stepping in. Can I do business in between? No? Okay, I'll wait. Whoop, there we go. There's London. Now, London filled those single prints, but there was a buy reaction there, right? Did you see that? Come on, London. Put some caffeine in that tea. Hey, Mikey, are you still in Oregon? Or did you take that job in New York? You're taking $1,000 hit on micros? Okay. Whatever works for you. Keep smoking those cigarettes and keep on trucking. See, we're coming into that 65 area where it was bid before. Do you have any thoughts on traders self-sabotaging and overthinking? Self-sabotaging is something, I'm not a psychologist, but I really think that if you understand and learn the business, you're going to have to rely less on trading psychology. You're overthinking because you have no idea what the hell's going on. That's why traders are overthinking and they're searching. And I feel bad because they're searching because I've done it too, right? So if you're overthinking and self-sabotaging, it means you lack understanding of the actual fundamentals that are moving price, which are order flow and inventory. You see, the sellers now have seen buyers, so they raised their prices because London couldn't take out that 65. Remember, we said there were bids down here, right? So now let's see if we can take out that 68 and a quarter, right? You have to understand what's going on. This is a sales chart. This is not some spooky random thing. If you think markets are random, I've got some oceanfront property in Saskatchewan to sell you. Come learn the business with us, right? If you learn the business and you understand, right? If you understand why things are happening, then you'll understand when not to be in a trade, when to get out of a trade, and what to expect from a trade. You trade the DAX. You know what? We used to have a lot of people who traded the DAX in our room. It was very popular about 3 or 4 years ago, and I haven't heard about it since now. So now we're taking that overnight high. That's running stops, right? As we take out the stops from that high of what day is this? The 19th. We took the stops, but they sold into it, which is par for the course. I would sell into it up here. Now we're going to backfill. So we created demand, right? That's what you do. Create demand. Then you go back and fill in that demand with supply. That's called backfilling, right? You create demand, you go back and fill it in with supply. That allows you to distribute size, but you stop selling right where you see a lot of demand, right? So you stop selling and then you lift the offer. That's why we watch this red line, the offer. The offer tells all. Yep. above 78.5. Yeah, it'll work. It'll work on the DAX. Any market that has inventory and order flow, it'll work. It'll work. One time framing higher. Now, those of you who want to short it, because I know you're all like, I gotta short it, right? It's like that episode of the Flintstones when Fred had to stop betting and all he kept saying was bet, 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 right? Everyone's going short, short. You're in the front end of the move, right? Let the market show you where the high is. This is a quick pullback because we lost buyers over 72, right? Let's see if the sellers, if they see buyers, they'll lift the offer over the current high of 72.75, right? And when this thing pulls back, look for bids here at 69.25. Okay? You want to short the backside of the move. Don't short the front side of the move. The front side of the move is for large traders to sell their goods into, okay? That's to liquidate goods, right? Wait till the sellers are desperate and compete. When you do that, you'll see the offer moving lower, and that's when you want to engage in a short, right? Everybody tells traders to short this. Why? Right? That's like telling you to go like guns blazing into a room full of drug dealers with automatic weapons. Sorry, I was watching Gangs of London last night. Okay? Don't do it. Let somebody else be the hero, right? No, no, don't worry. Listen, Jim, and I don't want to sound like I was beating up on you because I just want, people are very, very unaware of risk management. It's not a sexy thing, right? You know, but it becomes sexy when, you can't pay your rent. So we need to make people cautious, especially in these wackadoodle markets with 80, 100 point ranges, right? You can get into trouble really quick. So what we teach to do, because what I'm cheap, right? Having worked in the industry and worked for, cheap old men, right? I'm really cheap, right? I got 33 years, right? The owner of my first brokerage firm was worth like $600 million and he took the bus to work. Okay. He bought like 3 suits for 99 bucks. So, and he made us pay for coffee, right? He was so cheap and we'd make him like 300 grand a month. And, he was really cheap. So we learned as a good operator, you want to keep business expenses tight, right? So you guys can do whatever you want, but for those who are learning and struggling, that's what this channel is for. I love discussing larger concepts, longer time frames, but I feel at this time in the markets where so many people are reaching out to me telling me that they've blown up accounts and lost money, what do they do? So I've come up with this method. It's a 5-step method. So when the trade stops working, you're gone, right? Grab a cookie and get the hell out of town, right? It's a series, Greg. See how that offer lifts? I don't see a short yet, folks. I do not see a short yet. The other thing that you want to learn is never short a lifting offer, right? never ever short an offer that is lifting, because it says that the sellers, the people who are long here, they see buyers and they're raising price. You don't want to short into that. You want to wait till the sellers put the thing on sale, right? It makes its high and then the sellers move their offer lower like this. That's the back end of a move. That hasn't happened yet. Yeah, that's true, Phil. That's true. Unfortunately, yeah, because it's a churn business, right? I don't know. I think blowing up accounts is very emotionally draining. Um, I've never blown up an account. I've let them kind of wither because I didn't know what I was doing, so I just didn't trade, but didn't blow them up. But I had one of my clients sting me for 700 grand back in 1998, and that hurt. What time is used for gold and forex? I have no idea, Mohammed. I don't trade gold at all. The times will be on the Chicago CBOT or CME website. Right? So that wasn't a trading loss. We were doing a short squeeze and we had a delivery versus payment account with manufacturers trust. We took the stock from 3 to about 25, 26 bucks. And the client, who was just a rat bastard who looked like Walter Matthau, yanked $7 million, which was a lot of money at the time, out of manufacturers trust. I was at home with the flu, and my idiot partner overtraded our capital allowance in the account, which was wrong. And so the bank grabbed the sells, stuck us with the buys, and I was gone for 2 days. 2 expensive days. That's why I never take holidays. See the offers coming down lower? See how it's moved from there to there to there? Right now, before electronic trading, when there was like a little bit of a smoother flow, traders would be able to scalp short that and cover, short cover, long, long sell, short cover. It's a little harder now. It's easier to say after the fact that, oh, I shorted 75 and I covered 73, but it's quick and you've got to be fast, right? Yeah. So, yeah, I came back to work. My boss was literally, the owner of the firm was standing on the desk screaming at me. And they should have liquidated that position. They should have liquidated and then shorted the stock. I don't know what they were doing. I think they were on the other side of the trade. Anyway, I had a job for a while because I had to pay back that money. And I still remember I smoked an entire pack of cigarettes. And I don't even smoke. And my compliance officer just kept passing me cigarettes downstairs. Uh, yeah, it was pretty brutal. So I know how the emotional burden of losing money. Even it was my fault because I should have kept track of this guy. The trick to a short squeeze is to make sure you're selling from an offshore account somewhere else, so when it falls apart, you can cover. See, now this is what sucks people in. See, this is what sucks people in. What sucks people in is when it's this slow stalling price movement, and now everybody goes, "Who's going? Hey, it looks weak." because the price is moving slowly, right? That is a natural thing, right? I will find that out. I'm supposed to be demoing NinjaTrader. I'm looking forward to it. Fingers crossed. Um, I hear good things. I'm sure somebody can help out with that. See how the offer's lifting? So it's slow, right? It's slow, but do you see we can't offer underneath 75 and three quarter? Not just yet anyway, right? See, look how they get you. And then they just drop one buy order, and if you're short, you get stopped out. So that's what you got to watch for. You really have to watch for that, especially when a market is above all its inventory. Get what I mean? All the inventory in this market is underneath 57.73, right? All of this, that's your supply. That's the liquidating trader. That's the liquidation created this cost basis. And now we're going to try as hard as we can to take it and sell it. Once you're above cost basis, it's a difficult short, right? I would only short if we got back under cost basis, right? And you've identified a seller. The other thing too, it's 4:15 in the morning, right? And it's hard finding sellers of size at that time. So these are the things, tactical things you have to think about, right? Knowing that this is the supply and this is what you do with supply. Now, that's not to say that on RTH we don't correct inventory down. But at this time, short term, for now, I haven't been able to see a seller that merits me shorting this thing, right? And the reason I'm talking so much about shorting, right, is because I know people are short. I know you guys. I know that you're short, right? Our target is 80 and a quarter. I didn't even get a chance to do the look below and fail, which is the trade that we love is when it liquidates underneath 64 and then comes back up above it. We can go long here. I wasn't on the ball enough here. I saw this chop and I didn't like it. So my trade setup wasn't there. So I wasn't able to take the trade. So a lot of people, when they miss the long, they automatically go short, right? So if you are short now, right, say you're short 76, right? So if you're short at 76, put some bids down here at 73 and a quarter. Say you're short 5 at 76. Bid for 2 here at 73 and a quarter half. See if you get hit. If you don't get filled at 73 and a quarter, 73 half, then you know there's no supply. If you can't get filled on one measly micro, then you know. You guys understand? Whoa, what happened? Sorry. Apologies. That was me not knowing how to use Epic Pen. Oops. Right. So if you're not getting filled, right, if you've got a 73 and a quarter bid and it doesn't get filled, what is the market trying to tell you? There's nothing for sale. Remember Seinfeld? There's nothing for sale in Tuscany underneath 73 or even close to 73. See how it walks away from 73 because it's found buyers there. Okay? Buyers are here. Hey Dan, how you doing? So that's how traders used to trade in the old days. Remember in the old days when we rode horses to the exchange, right? You didn't have all this fancy footwork here. So you had, if you wanted to know if there was buying, you'd put an offer out. If you wanted to know if there was selling, you'd put up a bid and see who hit you and how much they hit you for. So if I was moving a stock up, right, I'd put a lookout bid at the high. Now you use the chart the same way as a lookout bid, right? So if you're short and you have a cover at a price that's not getting filled, right? That's like having a market maker going, psst, psst, psst. They're not selling down here. Move your bid up. See there. Now it's offered at 73. There you go. So you're getting filled. Now you've got actual market information you can use when you're in a trade. This is the backfill, right? This creates demand. This fills in that demand with supply. And we should backfill down to 69 and a half, which is where end period took the L high. That's where the bids will be. That's where shorts will be bid to cover. So if you're short, say you're short that 76, 75 half, you cover a little bit at 73, right? Where do you bid next? I would front run 69 half. I'd go in there, I'd get in there and bid 70 half, 70 half to 71, and let the market hit you and fill you on the way down. Nice trade. Stop, look, and listen, right? Put your buy orders in. As soon as you're short, you're a buyer, right? Don't hesitate, right? And especially if you're trading in RTH, get your orders in the system so you're not, and get used to doing that as a habit, right? The whole thing about this business, right? It seems you don't have to, it's hard because you got to change things, right? But think about, like, for these pilot guys, they adjust their course by, a small amount to avoid turbulence, but it moves quite a bit over time. So just a slight change in direction with some consistency is going to change the way your business operates. You don't have to do everything, just change one thing and try and consistently change to good business habits every day. Do something to change. Soon it will be, right? It'll be like automatic. It'll be automatic pilot. So you're not stuck in bad trades. So you're not trading at the wrong time, right? Words like FOMO and tilt don't even exist in your head because they're just so ridiculous in a place of business, right? So think like that, act like that, you'll become that, act like a pro, right? You know, do whatever you have to do to act like a pro. So where did we get down to? There's 69 and a half. We didn't even get down to 69 and a half, which is here. So do you see how the shorts came in and front ran that level? Everyone see that? So there's 69 and a half, right? That's where the bids we were expecting. And we actually got more buyers than expected because they came in and bought the 71s. Cutting a bad trade correctly is the number one skill. John, for you, it'd be like whatever you pilots do when stuff starts to go wrong, right? You automatically go through that checklist that's drilled into your head. You're not reading you know, how to fly a plane manual when you hit turbulence, right? At least I hope not. Let me Google this. Hey, folks, we're hitting some turbulence. I really don't know what to do, so I'm just going to Google it. Yeah, that'd go over well. Okay. Just learn good business habits. That's all you got to do. That's all you got to do. Okay. So if you were short, right? So if we did take the short here at 76, 75 and a half, we would have been out of that short by 72, right? See only flow, have a good one. Now the market rotates up because the seller has exhausted their supply under that level. Very simple. It's not easy because you've got to train yourself to do it. Like those things in karate, the Karate Kid was on TV on the weekend. And he was standing in front on top of this rock, kicking, trying not to fall off the rock. That's what training is like. It's okay. It's embarrassing because it's one of those things that we don't do naturally, right? We have to practice the skills, right? Practice the skills, right? Use the sim, right? Bang away on the sim, learn the keystrokes, how to use your order entry software so it becomes like second nature, right? Using your order entry software and whatever software you're using to put your orders in, put the buy in, put the stop in. As soon as you get filled, boom, put the offer out, right? Short, put the short in, put the stop in. When you get filled on the short, boom, the buy order goes in, right? Okay, I'm going to do a little bit of a review of the week, what we should look forward to. Now, honestly, with this crazy gap, it leaves things a little right? Watching this 73 will be key going forward in the night, morning, early morning. Okay, of course, the overnight low. All of the inventory in the overnight is underneath here. It's underneath 57.60. That's what the value area is. The value area is a fancy way of saying that's 70% of where the inventory is priced. Okay? So we're in distribution. When we put it on sale, we'll probably come back down to 60. So that's a big important level. And then, of course, the overnight low. Okay? Now let's take a quick look at equities so you guys have kind of an idea of what's going on. Here's, crabapple, right? We did a look below and fail of 209.89, right? So look for the middle of this zone, right? We have inventory here, so it's not going to be a quick bolt up like that. But the stock recovered nicely off that 210 level, right? So if you're trading equities, you can use the look below and fail. The stock looks below 209.89 and fails, and then you can go buy 210, 211 against that, use that as your stop, and now you're targeting the middle of the zone. So put your sell orders in if you are swing trading these things, right? Quickly, the old Amazon rainforest here. Look at that. You can see very clearly that the market is bid here, right? Look below and fail of 189.90, targets 195.80, over 195.80, targets 201.78. But you can see that we have sellers here before 200, right? The look below and fail is a great trade. It works on every product, right? Because it's based on the oldest business principle. You get liquidating inventory. People find out, hey, there's buyers here. Why? Because the market came right back to its cost basis, right? When the market comes right back to its cost basis, there's no incentive to sell cheaper because that's where the large traders paid for their product. So they just stop selling. The shorts come in and cover, and we start rebuilding it again. Let's see if those levels hold. Hopefully that makes sense. Old Google, I don't really look at Google, but a look below and fail of 163 targets 168.35. Right? Remember, we're going into the end of the quarter. We need to mark this crap up so our investors keep sending money. Right? Meta, this thing is a very thinly traded stock, but it's right back into this cost basis that we have here. So I'd say a break of 571.12, a break of 540. That means back into this zone, but till then, probably sideways, right? Micro squish, same thing. We're seeing sellers at that 398 level. It's just kind of hanging in this 362, 398. Let the market figure it out. If it does a look below and fail of 398, that'll be good, but there'll be sellers all the way up. Nvidia, look below and fail of 117 again. Last time it gave us a beautiful trade on Nvidia. Look below and fail of 117, targets 130, right? And then the same thing is happening here, right? We did a look below and fail, but we know that there's going to be sellers at certain levels. So watch Nvidia. If it can get over the 120, 121, you're looking for 124.56, and it's got to hold 117. And I think that's it. Oh, yeah, Tesla. Right? Look below and fail of 228, right? Look below and fail, look below and fail. Target is 261.57. Of course, you want to front run that. But that's your target for month end on Tesla, 261.57. And that's it. I don't have XLK. I'll do it up. Ed, if you guys want charts done, let me know. MSTR 327.46 is where that kooky thing is looking for. All of the inventory is above us still. Needs to clean out. But that's pretty much it, folks. Have a wonderful trading day. Be safe out there. And we will see you in our RTH session. Thanks, everyone, for joining us. Come visit us at Microefutures. And I will have my next one-on-one coaching starts. DM me if you want a free trader consultation. I'll even do what I'm doing is people who are interested in the lifetime coaching. I'll do a sample session with you and you can try it before you buy it. Thanks, everyone. Have a wonderful morning. Bye for now.